Palantir Technologies has dropped over 40% in just 2022 alone. And now that Q4 earnings are out, it's made it not any easier for stock investors to realize whether they should continue to hold on to this stock or not. If you own this stock or are looking to invest in this company, it's super important that you understand what these Q4 earnings results are telling us. And just jumping right into it, what we actually saw was an earnings per share of about 2 cents a share, versus what we were expecting on Wall Street was about 4 cents. So a big loss on what we saw in earnings per share. But then whenever we look at revenue, what we actually saw was around $433 million in revenue, where an expected only $418 million in revenue. So an actual beat. So it depends on what you're actually looking for in this company. Do you want those, a small amount of earnings now or a larger amount of revenue going into the future and try to worry about earnings later? However, there's a lot of other key factors that have come into play in Q4 earnings that I want to share with you. The first being the fact that you have to understand that there's two different revenue streams for this company. We have government revenue streams and then our commercial side. So on our commercial side, we actually saw a year-over-year growth of around 47% versus our US commercial side, which is probably our highest total addressable market, which we actually saw a growth of 132% year over year. Now, no one is let down by those numbers. The commercial side has been great. Okay, the problem lies in the government side, where we only saw around 26% growth rates, which is actually 4% lower than that 30% benchmark that Alex KARP has continuous to hype us up on. That benchmark being the 30% growth rates that they're going to see continuously every single year through to 2025. And overall, we still did see revenues of around 34% year over year growth rates. So that's fine. It's still over that benchmark. The problem is that what we're seeing is a downtrend in the government revenue growth, and that could lead to a problem as it could continue to grow smaller and smaller. So that is a very worrisome part. In fact, another worrisome part is the fact that we also saw in their presentation, they've always put in their total book deal value, and this time they didn't even put it in their presentation. They put it on a little page in the remarks that they grew at a rate of 38%, way below the 175% that we saw of last quarter. Yes, we're still growing at 38%, but it's nowhere near what they've shown in previous quarters. Now that is the worrisome side, okay, and there's some other guidance things that we'll talk about later on in this video, but going on to some positive stuff, we actually saw a lot of good things in their cost of revenues, okay, their expenses. What we could see is that their R&D expenses, which is their research and development, actually dropped year over year by 10.5%. This could show us that Palantir is actually very, very happy with the product that they have now, and now it's time to actually flip and go on to more of a sales perspective. Okay, we have the product that we like, the same way that Windows has a product that they like in terms of, building out that product. Okay, that's done. And yes, there's always going to be changes along the road, and R&D is never going to go away, but it could actually substantially subside as they now have something that they're truly proud of. And then also general and administrative expenses also dropped just a little bit of around 5.3%, but still it's good to see that those expenses are going down and we're not continuously building up higher and higher expenses. And we did actually see that total operating expenses did actually drop nominally about 1 or 2%, but the reason is that sales and marketing expenses actually went up. All expenses are important, it's good to keep your eye on all of them, but really sales and marketing is the only one that gets you in front of those clients. And from what Alex KARP said is that this expense is not going to go down anytime soon, considering that they're going directly after adding new salespeople to the staff, around 200 to be exact. Where Alex KARP even said in himself, they do have a nascent sales force, and they want to add to that because before the software was sort of just selling itself. Now they're actually going to be pushing it and trying to get it into every single company's eyes to potentially want this software into the future. Even the best software companies in the world, like Salesforce, has great sales forces. They have to sell their product, right? And even though the software can speak for itself, not everyone will know about your company unless you truly put into hiring those salespeople to go to those companies and address their concerns. I think that 2022 into 2023 are going to be huge tests for how we're actually going to be selling this product. But this is actually a really good sign showing that we could actually see a massive growth in the amount of revenue that we see if we're actually starting to focus our eyes on selling the product now. I want to just stop and add to this, for example. Yes, it's great to go out and get new customers, but what's very unique to Palantir is how high their net retention rates are. This is the idea that yes, we already have a client, but not only are they staying with us, but they're actually expanding how much they're spending on our product. Whenever we look at these numbers, we see US commercial net retention rates of around 150%. 150%, and then government spending side on their net retention rates are about 146%, by far some of the highest in the software industry. So once you have a true sales force, then you can grow the clientele base. And then every single year, on average, that clientele base is supposed to grow around 50% per year per client. Like, that is just out of control, and the scaling could get insane if they are truly good salespeople that could sell this product. So all of this sounds amazing and is very promising into the long future. The problem is what we saw into the short term, okay? That short-term future guidances for Q1 of 2022. Currently, Palantir is guiding for $443 million in revenue, which is just about 2.3% higher than what we saw last quarter. And then whenever we look at adjusted operating margin, we don't see anything better whenever we see about only 23%. Then, whenever we look from last quarter, that was actually 29%. So a big loss on the operating margin and then only slight growth on the revenue side. In the long term, however, we are still guiding at that 30% growth rates. And the closer we get to that 2025 number and we continue to get above that benchmark, the better this stock will be going forward. The stock price will be heavily correlated with that number. If, in fact, there is ever a drop below that benchmark, or the idea that maybe Alex Karp changes his forecast and maybe lowers it, then this stock is going to get obliterated. Maybe a correction even larger than the one that we've seen in 2022. That's just my prediction, however. But if you want to see the 29 reasons for why I bought Palantir stock, make sure you guys check out the video right there. But until then, make sure you guys give me a like and subscribe down below if you want to see more financial content just like this.